Hi, this is John Kingston from JR Trading Zone. Glad to meet you all in this video. Just I made 3 videos but great response from my friends. Thanks a lot for encouraging me and it will give me a great interest to make further videos. I am planning to make a series of videos first on trading and then on investing. Thanks a lot once again for the great support you are providing to me. But some of my friends called me and told, in a video you told stock market is simple, then why you are making lengthy videos, 25 minutes, 30 minutes? How can we watch these lengthy videos? But the one thing I will tell you, I mean stock market is simple doesn't mean that stock market is easy. Okay, simple means you don't think that it is very easy. We have to learn in a systematic way each and every point regarding trading and regarding investment. We should be very careful in learning. Then we can go to the subject. Today the subject is about simple and powerful indicator. I am using the simple and powerful indicator because there are actually two type of indicators. One is the leading indicator, the other one is the lagging indicator. What do we mean by leading indicator? Leading indicator should give us a signal where the market is likely to take support and where the market is likely to take resistance. Always market moves in swings. Okay, they don't move in a straight line. They make up movements and down movements. But we should be able to predict the support. Support means that when the market is moving down, it comes to a particular point and turns around. This is called a support level. And when the market is moving up, it goes. If a stock or market, anything, the instrument will be moving up and it will be turning. The turning point is called the resistance. Okay. So we must be able to know even before the market is open, even before the stock is moving further, we must be able to know where it is likely to take support and where it is likely to take resistance. Okay. So we must be able to predict the market even before the market opens or even before the movement of the instrument is happening. This is called leading indicators. The other one is lagging indicator. Lagging indicator means you are having lot of ready-made indicators in your broker's terminal. You just go and apply the indicators, and these indicators are actually lagging indicators. What do I mean by lagging indicator? The market is moving. After the movement, it will be giving you signals of entry and the entry point. Actually, it will give signals. As a trader, actually you will get only few minutes for trading. You may be entering the trade and exiting the trade within couple of minutes or within couple of hours. As a trader, the entry point and exit point is very important, actually, therefore a leading indicator can support us because we know the market is likely to turn here, and if it is turning, we can enter the trade. But if you follow the lagging indicator, you can't get the right entry. That's the main problem. It will give an indication, but the right point will not be there. It will give the indication after the market is moving. That is not useful actually for a intraday trader. Okay, therefore there are two types of indicators. One is leading indicator and lagging indicators. Okay, I only suggest you to follow, and which I follow is only the leading indicators. There are only few leading indicators, and one of the leading indicator today I am going to talk about one of the leading indicator. Always stock market, we can compare stock market to an ocean or sea. Okay, if you stand in front of the sea, some of the people are swimming across the waves. Even if you are a swimmer, in the pond or river, swimming in the sea is not easy. You should have a technique. You should know how the waves are coming and you should know how to cut the waves, and you should be able to swim across the waves, or otherwise it is very dangerous to swim in the sea. Before going to the computer presentation, I want to tell you one more thing. There are two types of people in the stock market. One, the traders, trainers. They may be traders and they may be trainers too. The other, the participants or the retailers who are entering the market. Okay. Those who are entering the market actually go to YouTube videos and see a lot of videos, and some of them go to mentorship programs, attend their classes and enter the stock market. Few try to study on their own. There are different type of people. But one thing I will tell you, I again repeatedly tell you, trading is simple. There are simple things in trading, stock market trading, and it is very powerful and it will work very powerful. Some traders keep lot of computers, more than 10 computers. In one computer there is OI analysis, the world market analysis, and they are keeping multiple charts, and lot of computers, more than 10 computers, seeing all the analysis, data analysis. But actually, are they seeing all these data to take a trade? Or should we see all these data going through all the computer screens, more than 10 screens there in the room, and they will show all the setup to these retailers? Actually, this is not necessary. A good trader needs one computer. If you are don't having computer also, no problem. If you are having the skill, or a mobile phone is enough for you to take good trades. That's simple. That's why I am saying stock market is simple. People are actually going beyond some holy grail formula or something very tough. Something is very tough in the stock market. We have to acquire the knowledge. We don't have knowledge. We have to study all. That's not the right thing. It is simple. It's easy. Study in a systematic manner. First, in this subject, I am going to show a very powerful, simple thing which you can do. All of you can do. But one thing you should do back testing. You should open your laptop or computer. I think everyone are having laptop and computers nowadays. Even though if you are not having a computer, no problem. Go to the mobile phone, open the trading view chart. Trading view chart. I will recommend you to use the trading view chart and watch the movement of the stock or index, whatever you are following. Just watch the movements, how it's moving, how it is taking the swing highs, what are the swing lows made, how can we draw these lines, and everything. That's all. For a trader, for a good trader, you need skill. Having 10 or 15 laptops in front of you, having a big trading setup, and wearing a three-piece coat with a tie and sitting in a very big luxurious office is not, it does not matter. Okay, if you are a trader, you should acquire the skill. Don't be afraid of these setups which these traders are creating and making. I really tell you one thing, friends, you can acquire the knowledge if you study it properly and regularly, because you should be dedicated in the studies. Without the dedication, you can't acquire this knowledge. Skill is important. I mentioned the example of sea waves. You can a great swimmer, he can be a Olympic medalist, but when you go to the seashore, a small kid will be crossing the sea waves and he will be swimming easily, but this gold medalist will not be able to enter into the sea. That is the case in stock market. Skill is there in you. If you are working hard, you can acquire it. Okay, I will show a simple and powerful indicator. I will be showing some of the indicators which are leading indicators, and I am only going to talk about the leading indicators, and we can study from the computer presentation. Let's start the presentation. As I am a Nifty Bank Nifty trader, now I am showing the chart of Bank Nifty. Okay, I am taking the example of Bank Nifty chart. This is Bank Nifty 1-day chart. 1-day chart means each and every candle is representing the movement of 1 day. Okay, but when we trade intraday, we use only 5-minute candle. But for marking the long time support and resistance, which is very important in trading, the traders use 1-day candle for marking the support and resistance. How we can mark the support and resistance? I will show you. You can use this tool, the line tool. You see, this is the top. This top part is called the resistance. Here you can mark the resistance level. Once again, here you are getting a top. This is the next resistance. Okay. Again, here you are getting a top. This is also a resistance. Okay. Now you got 3 resistance level. You mark this resistance and it is on October 21st. Then this is February here, January, February. 3 tops we have marked here. Okay. Now this is the resistance level. Resistance means, once again I am saying, the moment where the index is reversing. This part is called the top. The top of this chart is called, top of this swing is called the resistance line. There is some resistance and that resistance is pushing the index downwards. Okay. Next we have to draw the support lines. I will take this same tool. See here on the bottom you are getting a support here. We can give it a different color. Okay. For seeing clearly we can give it a different color, green color. See here, December 21st, here you are getting a support in this place. Next, here at this bottom on March 22nd, I think, yeah, you are getting a support. Okay. Now this is long time support and resistance. Okay. Whenever there is a swing high, you are marking that place as the resistance, and whenever you are getting a swing low, you are marking as a support. Okay. See, now you can see the power of support and resistance. This is one resistance which we marked. We can give it in a different color. Okay. This resistance we marked on 21st October. Right at this point, a resistance is taken again. Chart is moving downwards. Again, it is facing resistance here. You see? Okay. Here we mark the peak of the resistance. Now in the same point it is taking resistance. Okay. Now you can see we marked a resistance here, January. Then we marked a resistance February here. See, the same point, January you marked here. At the same point on April, it is facing resistance. Chart is facing resistance. Okay. You can give it a color, different color. Okay. Now clear? Actually, we marked 3 resistance. This one, and this one. But the chart, when it moved, it faced resistance here at the same point, here at the same point, here at the same point. Next, let's go to the support levels. Here we marked a support. We should give a different color. We can give it a green color. Okay. Fill it with green. Good. One support. Next, the support we draw is here. 2. The third support we draw here. Okay. 3 support. Actually, we have drawn in our chart. I think you can see it clearly. We'll make it somewhat big. Okay, now, okay, fine. 1, 2, 3. These 3 supports we have drawn already because these are all swing lows. Okay. Now you see, this was drawn on November, on the month of November. Okay. Then this one December, this one March. 3 swing lows. You see how beautifully it is acting here. Each and every support, you see. Here there is a support. At this point, right at this point, it is breaking the support, coming here. Here it's facing resistance. After breaking the support becomes resistance at this point. Again coming to this support. You see, the basic principle in support and resistance is when a support is broken, it acts as a resistance, and when a resistance is broken, it will act as a support. Even if this is the theory, we are price action traders. We want to know the logic behind this. That's very important. But that is a big subject, and this swing lows and swing highs are created because of one reason, that is called price action. What is happening in the junction? Who are deciding these candles to come back or reverse? What is happening in the junction? We have to make a clear study on this. But in this video, I want to teach how to draw the support and resistance. Okay, these are the lines which we draw, and these lines should be always in our chart. Even if you are an intraday trader, this long time supports and resistance should be always in your chart, because there is a high possibility of the candles to make a retracement and turn around at this point. This is what you are seeing here. Okay, now I am a Nifty Bank Nifty trader. I don't want to show all the examples of stock. I don't trade in stocks, but for your convenience, sometimes you may be an investor. If you are an investor, just I will show one more example, okay, of a stock. I will take the example of Federal Bank itself. You see, yeah, this is the Federal Bank day chart. How many of you are able to see support and resistance in this chart? From 2021, see, from Corona crash onwards, the chart is here, but you can't see it clearly. If I am zooming in, for our convenience, we can keep the chart like this. Okay, from 2021. Okay, how many of you are able to see support and resistance? All of you should practice on your own. You should take your own laptop. If you have invested in a stock, you should open the stock and try to draw support and resistance line. Okay, this is the basic of technical analysis. This is not the complete lesson about technical analysis. This is the basic foundation of technical analysis. Why it is turning around the support, why it is turning around the resistance, that is completely a different subject. That is psychological related subject, and we can see in a different video. See here, where will you draw the support? Here it's having a support. Here it's taking a support. Okay, these are all supports. Here it's having a support. Okay, now where can you draw the resistance lines? See, this is one resistance. This is the next resistance here. Fine. For the resistance, we should give different color. Okay. Yes. Based on this, how can you analyze the chart? You see, March 21st, it was trading around 91 rupee 30 paisa. Okay, then it fell down and made a swing low. This swing low we will mark it as a support, and this high will be marked as a resistance. When the price movement is coming here, right at this point, it is turning, again it is going down. Again it is facing resistance at this 91 rupee 30 paisa. You see, it is coming back, going back to the same zone. Now it's coming down. Now it is making a low, higher low. This area, this also can be marked as a support. Now it is breaking this resistance at this point, making a new resistance level or making a new swing level at 107. Suddenly it is turning from this point and coming, taking resistance exactly at this point. At the new support, it is taking support again, going, facing resistance right at the point. You see, right at the point it's facing resistance again moving back, again coming up. First here it faced resistance, second here, third here. When each and every time when the resistance is coming and touching, the resistance becomes weak. Okay, now in this area a price action is happening and there is a logic behind this. Okay, that we can study in a different video. It is breaking here. This is a consolidation area and it is breaking this area. This is called consolidation area. This is breaking this level and see here. Once again you can see here. This resistance is broken and this resistance is now acting as a support. You see, chart is moving, going up, coming down. It is taking it is taking support here. Now this level, resistance level, is acting as a support. That's why I say when a support is broken, it becomes a resistance. When resistance is broken, it becomes a support. Okay, now I have shown two examples. Based on this level, we go to 5-minute chart. After taking the 5-minute chart, then we apply CPR and other leading indicators which will support for us in the trading. Okay, this is what the professionals do. This is what the professionals mark in their chart. This support and resistance, teaching you support and resistance was the agenda of this video and I have done it. You have now studied how to draw support and resistance. Okay. Hi friends, in this video now we have studied how we can mark the support and resistance level in a chart. In technical analysis, when the support is broke, it acts as a resistance. When the resistance is broke, it acts as a support. Okay, if a resistance level is broke, then this level resistance will act as a support. This is the basic of support and resistance. This is the basic of what I call the basic of technical analysis. Okay, we have clearly learned. All of you open your computers. If you are following a stock movement, if you are an investor, open the chart of the stock. See where that chart is moving, how the chart is moving, where we can mark the support, where we can mark the resistance, and this will give you great knowledge about the movement of the stock. This is very simple, you know. This is very simple. Each and everyone can do. I wish you all the success in trading and investing. First, try to learn the basics and always try to learn the right thing. Right knowledge is very important. We should acquire all the knowledge regarding stock market. No doubt about it. If you are a stock market participant, you should know all the terms and all the things what is happening in the stock market. That is also important. But we should have a systematic process of learning. We can't learn from degree to LKG. From LKG we have to go to degree. Therefore I am telling we have a systematic way of learning, and we should follow the systematic way and the right way of learning. That's what I want to teach you. Okay, today we have learned a very good subject of drawing support and resistance. I wish that you have acquired a great knowledge about support and resistance. You all open your computers and laptops and try to mark support and resistance. Okay, you will get a confidence in you. When you mark a support level and a resistance level, when the chart is coming and turning at that point, or when the price action is made at that point, if it breaks your support, it will be making a price action there. You will get great confidence in you. I want that confidence in you. Thanks for watching my video. If you got any valuable thing in this video, if you think my videos are valuable, please support my channel. Your support will encourage me to make a lot of valuable videos. Okay, if you like my videos, like the like button, press the like button, share these videos to the entire trading community and friends. Let all of them, even if they are investors, let them learn how they are investing. You may be an investor, you may be have invested in a stock, but you don't watch how the stock is going, what are the movements of the stock. You don't watch it. That is the problem. You should watch the movements. If you are an investor, you should watch the movements. So press the like button. Once again, I am repeating, share the videos, subscribe my channel if you have not subscribed. Thanks a lot for watching. This is John Kingston signing off. Learn more, earn more. We can see in the next video. Thanks.